Snipers, you have to see what's happening to the Bitcoin price right now as we have initiated a long position at the 200-week moving average right around 22,840 US dollars. This has already hit its first profit target, but there's a lot to discuss on the charts today. Let's dive straight in, Snipers, and talk about what to expect, because it was very clear that when Celsius announced that they were disabling withdrawals, that began to cause mass hysteria in the markets, causing Bitcoin to break the recent low of 26,700 with a low now of 22,600, even breaching below this pocket here at 23,795, filling a CME gap. There's a lot happening, but the main thing to realize right now is that we are testing the most important moving average, which is the 200-week moving average, historically holding for Bitcoin in the past during capitulations. And right now, in the immediate short term, what we have to monitor is this extremely important resistance level, which is 23,795. We sliced right through. We decided to initiate a long position here as soon as Bitcoin tested that 200-week moving average. And for those that entered into that position with margin, our liquidation price right around 20,404 on 8x leverage. And right now we are facing this extremely important resistance level. And what we're looking for right now, Snipers, is what we're going to call a Celsius bottom. Because realize that users' funds right now are locked into Celsius. For those that were keeping stable coins on Celsius, waiting for Bitcoin to hit its 200-week moving average to enter into a spot position, they cannot even do that right now. And so what we're looking for is where Bitcoin decides to find its final destination, because if we're not able in the immediate short term, while you're watching this video in the next 24 to 48 hours, to get above this major resistance of 23,795, things could potentially get worse. And so the most important level to watch right now is this CME gap. And what's very interesting is that not only did we come and fill a CME gap, but we created a new gap on the equity markets. Look at the ES mini futures contract. This is the S&P 500's futures contract, forming a gap here, gapping down. That is actually a slightly bullish puzzle piece, because that means that we could potentially come back up to fill that gap here before we get more answers. And so right now for Ethereum, notice how we are also inside of a very tight pocket, and we hit this major support at 1165, and we also have a resistance right now of 1277. This is the range that Ethereum is currently playing in. Getting a confirmation of Ethereum's price above 1277 could potentially even be a confirmation that Bitcoin could move back above that CME gap. And so this is a very new situation, an ongoing situation, Snipers. Obviously, there's still a lot of price action going on. On the 6-hour chart, you can see continuous institutional sell pressure right now with the news that Celsius is disabling withdrawals. Why is this a big deal that Celsius is disabling withdrawals? I would argue that this could be a bigger deal than what happened to Luna. And I say that because with what happened to Luna, it wasn't a US-based company. This is a US-regulated company. And so this is the first time we're seeing a US-regulated company get into hot waters. And that could really create a lot of attention from the SEC and the regulatory firms. So I think that this is a very big situation, an ongoing situation. And that's why what I'm looking for is what I'm going to call at this point a Celsius bottom. And so I think that Celsius at this point has a lot to say, and they're still kind of holding themselves back only to disable withdrawals so far. We don't know if they are becoming insolvent or whatever that might be. And so I think that those are risks that are still on the table that we have to be cautious of, because if they become insolvent, for example, that could potentially make this become a lot more severe, where we could potentially come down to test the 2018 previous all-time high here, right around 19,000 US dollars. And so at this point, the first confirmations that we're going to need are hourly and 4-hour candles back above 23,795. Preferably Bitcoin gets back inside of this pocket. I think that getting above 24,295 could indicate maybe a relief rally is beginning to start, but that's all still very early to put on the table, Snipers. This is still an ongoing situation. I will mention that some revolving parts that I find very interesting right now is that the US dollar is breaking new highs. So you can argue that it just broke new 20-year highs with the DXY pushing up against its previous high. And then I think also what's very interesting is the Ethereum to Bitcoin chart is extremely volatile right now. You can see here on the daily chart, we're still holding this extremely important level at 53,500 Satoshis with the daily candle. And you can see we are moving up with the Ethereum to Bitcoin chart. It's interesting to see altcoins right now outside of Ethereum also showing some strength, up 3.23%. And so there are a lot of puzzle pieces here that I would say we need to monitor. If we look at the gold to Bitcoin chart, look how we just came above the 100-week moving average for the first time. And the last time in 2018 that we initially came above this 100-week moving average, we eventually came back below it. And so we never got to the 200-week moving average with this gold to Bitcoin chart in over 5 years. So this is really a very strong level of resistance here for the gold to Bitcoin chart. And then another interesting puzzle piece is MicroStrategy, right? The largest holder of Bitcoin in equity markets. You can see here, it's actually doing something a little bit abnormal. Even though Bitcoin's daily candle and 6-hour candle are currently red, it actually has a green candle. So it looks like there are buyers. It gapped down. And so that's nothing crazy, but it's interesting to monitor those puzzle pieces. And then I will also mention this. If we look at Ethereum on the weekly chart against the US dollar pairing here, and we pull up these moving averages, you can see it's also tested its 200-week moving average. And so this is a place that a lot of investors will wait for to enter into positions. And it's unfortunate that for those that have funds locked into Celsius, they can't even move those funds into Bitcoin if they wanted, which is why I believe what we're looking for right now is what we're going to call a Celsius bottom. This is still a very, very premature situation, snipers. We are just now getting this news over the last 24 hours, and we are currently still in a very strong downtrend. And so I would say that the next major support level here is at 19,000. And below that, we really open up a large door all the way down to 10,000. So I am definitely not expecting that right now. I think that the worst case scenario in the immediate short term is possibly 19,000, but this is all going to depend on the news with Celsius, because this news that they could potentially become insolvent could really make this a lot more severe. So let's see what happens, snipers. I will keep you guys updated as the situation progresses and matures. But right now, the most important thing to realize is that Bitcoin is inside of a range with a resistance of 23,795 and a support of 19,000 US dollars. We need to see hourly and 4-hour candles and price action get back above 23,795 to assume we're not going to be seeing further downside. It's clear that Bitcoin is currently fighting this level, and then Ethereum is playing inside of a range right now with a support of 1165 and a major resistance of 1277. If 1165 breaks, it opens up the door to 900 US dollars for Ethereum. We want to get above the resistance preferably so that we can open up the door back above this weekly open here, sitting right around the 2018 previous all-time highs at 1440. And so I'll keep you guys updated, snipers. Very, very premature situation. And we are inside of a long position here at the $22,800 level. And I am confident at the 200-week moving average, it is never a bad place to dollar cost average long-term positions. And with that, thank you all for tuning into the channel today. Until next time, snipers out.